Hi, and a very warm welcome to all the viewers for yet another episode of Market Trap Beyond Boundaries under Talk of Town Studios. I'm your host, Ashwin, filling in for Lakshmi Narayanan, who is on an eternal break practicing cricket. Looks like he wants to enroll himself into the Indian A-League cricket team. And welcome, Pramanjan. You've got a lovely background. I believe you are on a joy ride outside of Bangalore. I think after
Absolutely.
2 years in Dubai, visiting Bangalore with the wonderful weather must have been a pleasant time for you here. I understand why you are taking a bike ride outside outskirts of Bangalore and managed to log in out of a restaurant and to connect with all our viewers. So welcome to Bangalore, and I hope you're having a good time in Bangalore.
Absolutely. Very good morning, Ashwin. So it's a lovely weather outside. I just came on a bike ride, seeing in the morning that it's drizzling. So
Yes.
I came out and enjoying the weather. So good morning and coffee in hand, eyes on the screen. Markets are playing hardball today, and every move counts. Ashwin, today the ride is very wild, just as Bitcoin, which has moved last week very widely. So
Absolutely,
that's
absolutely.
how it is like.
So it's good that you've transformed your lines to more of Bangalore, the Indian context, and not included Dubai here. It's wonderful to have you here. So like you rightly said, markets have been playing hardball today. With your permission, I will take the liberty to start off with the charts first, and
Please, by all means.
most importantly, I am very keen on showing our viewers the silver chart, because a lot of comments on the personal email or a request came in from people asking for
Silver.
silver on the longer time frame, because we're so focused on, I mean, Prabhanjan, what happens most of the times with us traders is that we so get engrossed in the shorter time frame, the 1 month, 2 months, 1 week, 2 weeks. We kind of tend to forget the larger time frames and what exactly the placement of the chart or the positioning of the price level on the larger time frame is and how much higher it can go. So in that context, I thought I'll start off with the charts and Nifty open interest and of course the silver chart. So give me a minute. I'll quickly share my screen.
Sure, sure, sure. So whilst the charts come up, I agree with you. The silver is on a very fundamental bull
Yeah,
run.
absolutely, absolutely. And what is happening is that at every level, you see that there is going to be, you assume that there is going to be selling pressure, and unfortunately, it is not giving. So, anybody who's looking to short sell silver at this point in time might want to keep their hands off silver, especially on the shorter side. And
Absolutely.
people who might have booked the profit early or wanting to get into the rally, don't be disheartened. There is still a lot of upside to go, but don't just jump the guns and go all in at this point in time. Wait for those intraday dips, intra-week dips, and then I think they'll get the best of prices. So starting off with our big guy, the Nifty, uh, it's clearly evident that it's getting into a tight squeeze here. I'm not sure, Prabhanjan, just to reconfirm, the charts are visible, is it?
It's visible, vividly
Okay.
visible.
So these are the points of uh, these are the touch points, these are the points of reflex. Now again, you have a good support. What we are expecting is some sort of triangular congestion happening in Nifty, and at some point in time we are sure that it's going to break out. While we have an while we have a bias as the breakout towards the upside, we still want to be ready for any sort of surprises from the market, considering the fundamental news factors that keep flowing in every alternative week. uh, of course, you're the right person to talk about fundamentals. I'll not enter that territory, but having said that, it is clearly evident and visible from the charts that Nifty is in a tight squeeze, and so is the VIX. VIX is been correcting every week, which is for the option traders. It's the premiums are kind of dropping week on week, so it's not a very good market for the option traders. We don't know how much for, because we are hitting multi-year lows in the week, so which also kind of gives you the strength in the market. But eventually, when the breakout happens, the VIX factor is going to kick in, and we're going to see the VIX shooting up. But for now, from my personal desk, I am not really taking any new or large positions in the options. This is particularly for option traders. Whilst you have certain sectors like the automobiles, the metals, and a couple of PSU stocks which are really showing a good breakout, that's what my focus on right now is. But from the Nifty point of view and the option trading point of view, I do not hold any large positions in Nifty. For the week, but of course you get those intraday opportunities which you can always encash upon, and it is also clearly evident from the open interest here. There is a very very tight squeeze between call and puts around the same level, so I expect market to continue to be range bound for the next 1 week to 10 days before breaking out either on the upside or on the downside, with an upward bias to be about 60% and a downward bias to be about 40%. That's a very big ratio that I am talking about. Now moving on to the trend of the hour, silver. What we are seeing is the $47 mark was marked in the first time in the year 1980, then in around 2011,
Right.
and this is a 15-year. After 15 years we are retesting the highs, and almost again after 45 years we are retesting the highs. So in technical terms we are almost looking at a triple top breakout. And also for people who understand technical analysis, we have two cup patterns that are being formed. A breakout somewhere will happen. You will naturally have some selling pressure coming in around lifetime highs, and once that new lifetime highs are made or a decisive close above these levels are made, probably in the next 1 or 2 quarters, we are going to see the biggest of big bull markets in silver. But like I initially said, just because it is testing a lifetime high, do not jump the guns and pull. What's happening, Prabhanjan, is as an investor, you will be naturally tempted to pull money out of equities and put it into silver because equities have been underperforming and silver is outperforming. The natural tendency of any investor will be like to pull money out of an underperforming asset and put money into a outperforming asset. But had it been done around these levels, it would have been good. None of us anticipated that the silver will shoot up as fast and as quick as it did in the last couple of quarters. But do not make the mistake of moving money out of equity and putting into silver. Maybe a slight overweight is fine, but do not completely exit equities because it has been under consolidation for a very very long time, and we are sure that a breakout is coming eventually, maybe in the next 1.5 quarters. Around the same time, you might see silver easing off because naturally, when you are at lifetime highs, there will be some selling pressure coming in. But for traders, do not go short on silver. At least not don't highly expose yourself on the short side, because silver, when it really picks up steam, it's like a dam breaking, the water breaking out of a dam, and the gush of water is so it comes with so much force that it becomes unstoppable. So do not take leverage and go short on silver. Use those intraday dips, intra-week dips to move, position yourself long on silver. Or if you just want to be an investor, just look at something like a silver ETF or a silver piece, and you have almost 50. The other day I was looking at, there are almost 15 to 20 ETFs on silver. So you can do an SIP, or you can accumulate silver piece like a stock and hold it for the next 5 years. There are so many alternatives that you can do, but the bottom line is silver is a commodity that you really don't want to mess around with on the short side, and look to creating long positions as and when you have an intra week dip. For all those people who asked our opinion, this is a triple top breakout happening on silver with a 45 year high being broken, retested, and a 15-year high being retested. Two cup patterns are being formed. So a breakout from these levels is going to see massive moves on silver on the upside. And I do not want to. The next question naturally is that what is the target on silver on the upside?
Right.
When when the consolidation is breaking out of, when a 45-year or a 15-year consolidation is breaking out or highs are breaking out, I really do not want to put any target, because you never know, the targets that we have in mind might just be a milestone and not really a destination, so all those can be breached. But for now, the bottom line, the point I'm trying to make is I'm bullish on silver, but be ready for interim corrections and very, very wild swings considering they're trading at lifetime highs. So
Right.
over to you, Prabhanjan, for all the world market as well as the Indian markets and the fundamental factors that are driving the markets so far.
Great. Thanks, Ashwin. As usual, let me touch base on the main parameters. The Brent crude is,
Yeah.
around 64. If you
Hmm?
track the Brent crude, it's softened a bit from
Yeah.
66.63 levels to 64, you know, and the dollar index also has softened a bit. I mean, from 98 levels to 97 levels. Uh, and the rupee, it was more or less stable. It was trading around 88.77 in the last week. No, I mean even the Friday closing is also about 88.7. So
Yeah.
no much of a big moves in the rupee, and we need to watch on the India VIX. The last
Hmm.
week India VIX closed around 11.42, and now it's around 10. So it's but still again, Ashwin might not like low India VIX, but I mean, we need to watch out on why this VIX is low for a longer periods of time. And Ashwin, like if you allow me, I would also want to touch base on how Bitcoin has surged to a
Yes,
2 month
please.
high, in this particular week.
Yes,
Uh,
please.
so it touched a high of $122,000 one Bitcoin, making a significant rebound from the recent lows. Um, what are the reasons? Is Number one is political uncertainty, concerns over a political potential U.S. government shutdown, and of course, it has been shut down, and the investors are driving towards the Bitcoin as a safe haven asset. We also need to talk about the ETF inflows, where significant institutional demand, particularly from the US, they have spotted Bitcoin ETFs, and they have been a key catalyst for the rally.
Yep.
And technically, if you ask me where is the Bitcoin is consolidating, it is somewhere consolidating near $108,000 to $109,000. That's the
Right.
support I would say, with a breakout about $113,000 to $115,000. And if this breakout happens above within this range, then I'm seeing a Bitcoin targeting towards moving towards 120 to 135,000 US dollars. So that's where I'm looking at the Bitcoin.
That's almost another 8 to 10% jump.
Absolutely, 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 and especially the Trump policies these days. Investors are losing the confidence on next near term, so they are building Bitcoin as a safe haven. So that's what is on the Bitcoin. And on the US markets, what a week it was. US equities extended their rally with indices hitting fresh all-time highs. The S&P 500, the
Yeah.
Nasdaq, the Dow, all closed near the record levels. Across global markets, investors piled back into the risk. Global equity funds saw their largest inflows in the in nearly a year. Uh, white while bond funds also attracted capital flows. I hope there is no disturbance, right? I'm sitting in a coffee day.
No, no, no. I'm just thinking myself. If I were there, I would have ordered a devil's zone with extra whipped cream.
Okay. Oh, great, 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 great. Thanks. So, notably, the money market funds recorded at a very net inflow of USD $8.8 billion, the first positive week in three, signaling that some capital is still parked in shorter duration vehicles. So
Right.
this is
Right.
very interesting, Ashwin. The money which is parked in the shorter duration vehicles now is slowly flowing into the equity market, US equity markets. But
Oh.
of course, the emerging markets, the story is completely different. Equity funds saw a slight outflow. USD 239 million we saw, even as bond funds received USD about 373 million. So these are the latest
Yeah.
stats which I have collected by end of Friday. Um, in India, domestic markets extended a week on a constructive note. They ended the week constructive note. The Sensex added about 224 points on Friday, with gains led by the banks, metals, and some consumer names, some pockets in the consumer
Right.
names. What are the key drivers is the rate cut hopes in the US. The backdrop of resilient inflation data and delayed hiring stats due to the US government shutdown has further fueled some expectations for a Fed rate cut in the October.
Hmm.
Shutdown meant that the benchmark non-farm payrolls report was postponed, creating a data vacuum. Yet markets appeared largely unfazed, leaning instead on dovish expectations.
Correct.
Um, on the treasury yields, they were mixed. While some long-term yields nudged higher, bond markets also rallied as weaker than expected private, payrolls raised rate cut hopes.
Correct.
I'm also seeing some sort of a sector rotation. The tech,
Hmm.
AI, and the rotation names remained at the forefront of equity strength, with sector-specific funds seeing a record inflows. Um, you know, and another major reason which I also see is the central bank divergence and global policy postures. If you see the
Okay.
US market on a US remains more on a hawkish to dovish transition path. The Fed is very carefully calibrating the cuts.
Hmm.
uh,
Hmm.
Europe, the European central banks and the Bank of England are maintaining cautious stances, given sticky inflation and fragmented growth. Coming to the Asia, the PBOC pledged liquidity support and better fiscal coordination. Of course, India also have seen a recent MPC meeting. The RBI held the policy rates steady at 5.5% unanimously. That was very consistent. I mean, not consistent, but this was very worth noting. It was unanimous, and it signaled openness to cuts later, subject to tariff developments and all that. Of course, the tariff risks and India pharma sector export reaction stays, because 100% tariff on the Indian pharmaceutical, so it still is weighing on the markets.
Correct.
Uh, if I talk about yield curve in the US, it steepened modestly with long end rates, inching upwards relative to short end.
Hmm. Hmm. Hmm.
Tilted modestly towards the intermediate maturity bonds to avoid duration risk. Balancing yield versus rate sensitivity. They are trying to make that calculation now and trying to move towards intermediate maturity bonds and avoid the to avoid the duration risks. And if the Fed cuts the emerging markets like India, they stand to gain, to benefit via capital inflows. So these are the global factors which are weighing on the Indian markets, which are good for US markets, but very varied, having a varied results on the Indian markets.
Yeah.
Uh, though there are very positive moves in India, like RBI pause underscores the caution in a volatile global and tariff environment. Inflation projections for India has been revised downwards, whilst the growth forecasts were upgraded. So, though the domestic factors are on a positive, on a positive note, the global factors with the domestic factors are weighing on further upmovement in the Indian markets. So we
Absolutely.
need to be a little cautious on the markets, wait and watch policy, and I feel the Indian markets will show some sort of trend only on two factors. One is the recent RBI cutting on the rates that should start flowing in the markets now. After the festive season of Diwali, the GST rates started kicking in. The domestic consumption theory has to pick up. So we need to wait and watch on how it flares on the Indian markets. Number one. Number two is the how India and US is sorting out on the trade.
Trade.
So these are the true kicker points for setting a direction on the Indian markets. So this is how we need to be a little cautious and have a wait and watch from the global perspective.
Absolutely, Prabhanchan. If I can give you a cricket context, so what is happened is we are playing on a very tough pitch right now. it's bouncing. There are a lot of swings happening. It's just that you will have to let the ball wear out a little bit, play defense, and not take any risky bets or attempt any risky shots. Let go of those balls outside the off stump. Only those loose deliveries have to be hit boundary. Eventually, once the pitch starts wearing out and the ball starts wearing out, you will get your time to pull in your shots. Like you rightly said, just wait and watch. I know it is getting a little frustrated for a lot of investors because nothing really big is happening in the market. So, we have a time when we feel that things are breaking out and suddenly you have a selling pressure coming in. Naturally, it's the emotion that is finally going to take over than the logic. But I've always believed, of course, over experience after having made a couple of mistakes, of being in a hurry in the market, the strongest of strong stocks will prevail. So, sticking to
Right.
your fundamentals, identifying technically the right levels of breakout and the price action, booking profits at the appropriate time, churning the portfolio, revisiting it once in a quarter to understand how things are performing, and sufficient diversification with commodities, with different sectors, and sticking to sectors which are active and have the most potential. uh, and one additional thing I want to add here is, you should always segregate between your long term and short term investments.
Absolutely.
Preferably, if you have two accounts, nothing like it, so that there is clear segregation. Because most of the times, either we are in that short term mode, wherein even we try and pull in the long term portfolio, and churn it. And when we have short term investment, but also on the other side we have long term investment, we ignore the short term investment. They'll be falling down and their fundamentals would have changed, and we'll say let us hold it for eternity. Those
Absolutely.
mistakes, if we are able to avoid, and having a clear segregation between your short term and long term portfolio, or rather your trading and investing portfolio, makes a real difference. And like I said, sticking to the fundamentally strong scripts will, irrespective of all these fundamental factors on the global front, on the domestic front, will take a backseat, and the strongest of strong companies will always prevail and give you the desired result. So, like Prabhanjan always keeps saying, when you're investing in stock, remind yourself that you're investing in a business and don't be in a hurry.
Absolutely.
So,
Absolutely.
with that note, is there anything else that you would like to add, Prabhanjan?
Yes, I mean, if I can quickly, touch base on the recent Reserve Bank of India updates,
Please, yes.
in the benefit of the for the benefit of the viewers. Uh, the measure, I mean, it's worth noting this particular, monetary policy committee meeting, is that though unanimously the rates has not been hiked, it has kept at a constant. It is worth mentioning that the foreign borrowing rules have been eased, which is a significant
Mm-hmm.
breakthrough. The RBI has proposed relaxing norms of external commercial borrowings. Firms now may raise up to 1 billion USD or 300% of their net worth, whichever is higher. uh, this really replaces the prior ceilings. You know, the cost caps on most foreign borrowings would be scrapped, allowing market-based rates. However, borrowings with maturity of less than 3 years will still face some restrictions. But
Correct.
eligibility for all the firms, Indian firms, have been broadened. Even firms under restructuring or investigation could tap overseas debt. This is one significant thing. Earlier, the firms which are under reconstruction or investigation were not allowed to tap the overseas debt. But now eligibility is broadened, right? So this is a one significant move which I would say that RBA is unanimously, and of course without government intervention, RBA. I mean, it's a
Correct.
yeah, it's a joint team effort from the government of India and from the RBI. Now, another one important thing,
I mean, I'm
uh,
sorry to interrupt there, Prabhanjan. I think these are hidden gems that are happening behind the scenes
exactly,
that we are not very aware of. We're just so focused on those rate cuts, the FIS inflows, but these are
absolutely.
hidden gems that are happening behind the scenes, and it could drive the liquidity so much in the market. Yeah,
Absolutely. And I would always say this will really help the foreign portfolio, in investors. It
yeah,
is like, long-term capital that is flowing in. These measures, hidden gems, as you rightly mentioned, this will help to tap the long-term capital inflow into the country. And the
Absolutely.
second most important thing which the RBI has, brought self-regulation for the non-banking finance sector, NBFC sectors.
Hmm, hmm, hmm,
Uh,
hmm.
you know, uh, this is one I would say breakthrough, things which the RBI has come up. The RBI has granted self-regulatory organization (SRO) status to the Finance Industry Development Council (FIDC) for the non-bank lending NBFC sector.
Right.
This move aims to bolster compliance, early risk detection, and promote industry standards with NBFCs. So these are the two things which are like RBI is really unanimously has brought in these two structural changes. If you see NBFC, any kick start with the NBFC will kickstart the growth, right? That coupled with the GST reforms which the government has brought in, and I'm sure this is one of the reason why RBI has made an upward revision of our growth. You know,
Hmm, hmm.
it now projects 6.8% GDP growth for FY26 from earlier 6.5%. And they say GST rationalization, etc., is one of the important thing. So, RBI and the government are moving in the right direction. Very policy and structural changes they are making. So, and I would always say India is in a very sweet spot in next decade to come, next 1 or 2 decades to come.
Absolutely. So
So,
ignoring all the short-term volatility and all the news inflows that we are witnessing, we use this as an opportunity to place our bets, create a strong portfolio for the next 1 decade. So
absolutely,
I'm in 100% agreement.
absolutely.
So, with all said and done, we wish viewers a very cautious week ahead, as we are quite aware and quite aware of the fact that it's going to be a very squeezed week, with the weeks also indicating a very tight range. Keep looking for, like I always say, keep looking for those low risk and high reward opportunities. Look
Absolutely.
for those fundamentally strong stocks, and keep reviewing your portfolio. Weed out those underperformers, bring in those outperformers, and have the right set of diversification and allocation between commodities, the ETFs, and the direct stocks. In the long run, we are going to end up getting our desired result. For the week ahead, we are exercising a wait and watch stance for now, with only a few specific sectors that are in the limelight, and we just want to keep them in the radar so to get the right entry point. So thank you so much for joining in, Prabhanjan. Have a wonderful, safe ride back home, and we will connect with you next week. Until next week,
Sure.
have a good week, and thank you to all the viewers for your support throughout this stint with the Talk of Town. Thank you so much once again. I'll
Thank
see
you
you
so
next
much,
week.
Ashwin. And I also want to thank all the viewers and very happy festive season, great festivals. We just had a great Dashara and then waiting for the Diwali. So
Diwali,
I hope
absolutely.
this Diwali too, the markets make new heights.
Absolutely, and I will definitely come up with couple of questions regarding sectors and stocks for Diwali, because that's been our
Yes,
practice.
yes,
As they call Diwali picks, every broker, every advisor has gotten into that habit in the last couple of years. So, Prabhanjan, you too will have to come up with certain sectors and
definitely,
stock specific
definitely.
advice.
We will do that.
Thanks, Prabhanjan. You have a good day there.
Thank you so much. Thanks,
Bye.
Ashwin. Thanks all the market enthusiasts. Have a nice, great week ahead. Bye bye.